Aloha there, traders. Great to have you again. Beautiful trading week. Welcome, whichever part of the world you're joining us from. Mambo, Karibu, Salbona, Ekabo. As always, I'm Atomashi Dania, Vestrados Global Market Analyst. Okay, so this week, the 4th to 8th of August 2025, we're going to be looking at some pairs, the Kiwi, the AUD and the USD JPY. And as always, we're going to be running with our fundamental analysis first. Okay. Um, so today, Monday, is technicals day. In fact, this week is going to be a barrage of technicals, right? Technical days where we have very little high impact or maybe no high impact news released on several days within the week. So be on the lookout. And that makes sense because last week was massive with lots of economic events on the economic calendar. Okay. We had a lot of news back to back. But this time around, don't bank on it. Okay. So on Monday, we got a technicals day. Okay. Tuesday, the US ISM services PMI, an index measuring purchasing managers' sentiment as to the manufacturing sector or services sector rather. Okay. In the US. And then we have the New Zealand employment change and unemployment rate to be released on Tuesday. On Wednesday, we got technicals day, no significant data. On Thursday, we got the unemployment claims, the US unemployment claims, the weekly. And on Friday, also technicals day. Okay. For the unemployment claims, we do not expect any significant impact in the markets because it's really quite weekly, right? And it's not expected to move the market unless, of course, we got significant changes back to back within the course of maybe changes every week, right? Perhaps three changes in 3 weeks, poor changes in 3 weeks, good changes in 3 weeks, and so on and so forth. Consecutive weekly higher unemployment claims for at least 3 to 4 weeks start to trigger the markets or signal the markets for something bad to come. So this week, however, we don't expect that to happen. And even if it does, we don't expect any impact because the previous week and the week before have been quite good. All right. And then to crown it all up, Donald Trump struck a deal with the EU. That's massive. Okay. He struck a deal favoring majorly the US. All right. Of course, in the long run, analysts predict that there's going to be inflation in the US because of the prices, due to the tariffs and so on and so forth. Also, with the level of investment coming into the country, America is going to be richer, yes, but it remains to be seen the long-term effect um, on labor, as we saw last week on Friday. Jobs report was poorer than expected. Layoffs are already happening, and decreased job creation already happening in the US, possibly because of the tariffs being slammed on different countries by Donald Trump. So if we get more of this in the weeks to come, definitely we're going to see some strong weakness of the US dollar. But for now, the US is starting the week strong with a good deal with the EU. Okay, so that's good. And we seem to have a respite from what happened in the market last week. The US dollar had a brief moment of respite, one good week in the course of the year 2025, the best week so far, massive strengthening across board. Now, for Bitcoin, you know that tariff war escalations or increased global uncertainties or any form of global crisis may affect the market, could increase volume of transactions. We could see larger volume of trades on Bitcoin because of these uncertainties in the market if they happen. All right. Let's go on to the charts. First, we're going to be starting with the AUD USD. We'll start with the Aussie, and the Aussie says that moving right now in an ascending channel, right? Price has broken strongly below the ascending channel, but it's currently reacting to the 100-day moving average right there. The thick blue line, this guy right here, is the 100-day moving average. I'm going to highlight that right now. It's reacting to that. We saw a massive push up on the AUD USD. However, in reference to the ascending channel depicted on the daily chart, we see that price is currently reacting to a significant reaction point. Okay, perhaps maybe a key order block level here, 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 and here. If you look at the yellow circles, it's currently at that level right now. Okay, and it's locked in between there and the key support point. So for me, if you consider the 1 hour chart with something that looks like an inverse heads and shoulders pattern, okay, we see an inverse heads and shoulders pattern. Let's give that the green color right there. You see the inverse heads and shoulders. That's the right shoulder right there. And the head. Okay. With a nice bullish engulfing pattern right here. You can see the bullish engulfing pattern. Okay, let's try to highlight that. It shows that there was strong price rejection at the 200-day moving average, 100-day moving average on the daily chart. This guy right here. When he hit the daily chart, yeah, this one, the hit the 100-day moving average, the blue line. Maybe we'll turn it to red for clarity. We had a strong reaction, and that strong reaction created a bullish engulfing pattern. On the daily chart, you see that right there. This bullish candle swallowing this bearish candle here. Okay. Also on the 4 hour chart, you see that. And then finally on the 1 hour chart, you see that right there. And what does that tell us? Price rejection. There's strong price rejection of that level. Therefore, there seems to be a reaction around 6485, and 6485 is a significant point for me because, again, it seems to be an order block level of July, June, May, and early May. So if price breaks strongly above that, which also coincides with the high of the bullish engulfing pattern, the swing high here, then my next most likely target will be 6500 psychological level. If it goes above that, I'll be targeting 6515. And if it goes above that, my next target will be 6530. And 6530 seems to be close to the support border of the ascending channel, the lower border of the ascending channel right here. But on the flip side, we see another significant reaction point right here. 1, 2, 3, another significant support point. In fact, if price breaks past that 0.6453, then my next most likely target will be 6431. If it goes below that, 6406 is my next target. And below that, perhaps 6384. And then finally below that, 6355. Now, what's my take on the AUD USD? Considering the fact that the US has struck a deal with the EU right now, I favor sell positions, but I'm open to short-term bullish positions above 0.6485. So if I'm buying above 0.6485, I'll go in, get out quickly. I won't waste time. Short targets, 1 or 2 take profits, or if all three, but get out quickly. All right. And then if it breaks below my key support level, especially 6431, then I switch back to a bearish stance. So it looks like price is going to go briefly bullish before it comes bearish. Okay. It's important to keep that in mind. Briefly bullish before it becomes what? Bearish. All right. That's for the AUD USD. Next, let's do the Kiwi. So the NZD USD, believe it or not, has formed a head and shoulders pattern. The head, the left shoulder, and the right shoulder on the daily chart. Tricky. Okay. But there seems to be clearer patterns also on the 1 hour chart. Now, just like the AUD USD, it seems to be reacting to the 200-day moving average, somewhere close to it, on the daily chart. Okay. But to be more specific, yeah, we see the bullish engulfing pattern on the 4 hour chart right there. Nice bullish engulfing pattern. It's telling us what? Price rejection. Price rejection. You can see that very clearly. You can see that very clearly. So nice bullish engulfing pattern right there. Price rejection. Okay, we see a swing high form around that level, and we see that it seems to be a clear significant point right now. In the past, okay, price reacted strongly to it in the past. We see here, okay, here and here. Therefore, if price breaks above the swing high 65928 on the 1 hour chart, I'll consider bullish positions, buy positions to 5940. If it goes above that, 0.5954 will be my next level. This guy right here. Okay. On the flip side, if price breaks below 0.5878, again, this is the heads and shoulders pattern. You see that? If it breaks below 0.5878, then my next most likely target will be 5852. If it goes below that, 5821, and below that psychological level of 0.5800. Now, what's my take on the NZD USD? Of course, because of the trade deal, and the dollar has been doing good because of the deals being struck back to back, favoring the US massively. I favor bearish positions, okay? And also because of the US dollar index, I favor sell positions. However, I am open to short-term bullish positions uh, based on a break above 5928 on the 1 hour chart. Okay, that's my take on the NZD USD. I favor bearish positions, but I'm open to short-term bullish positions at the break above 5928 to 5940 or 5954. That's my take on NZD USD. Now let's go to the next. The USD JPY, the yen. So of course we know that this pair has been moving very nicely along an ascending channel on the weekly chart. It looks like it's reacted to the lower border of the inner channel, as you can see right there. Must have reacted to the lower border of the inner channel. All right. On the daily chart, we see that it's broken below significant reaction point here and here, and also here. You see the significant swing high, and it's constantly or currently reacting rather to this reaction point 147.20. Okay, which you can see right here on the 4 hour chart. Seems to be an order block level. All right. But more specifically, it's moving very nicely along an ascending channel. If you follow the green lines, that's the ascending channel right there. Okay. Price right now has reacted to the resistance border, that's the upper border of the channel, and it's trying to target the lower border. So for me, if price breaks below the psychological level of 147.00, then my next most likely target selling will be 146.54. And if it goes below that, then I possibly look at 146.00 psychological level, which would coincide with the lower border of the channel. Now, on the flip side, okay, we see that price is also still reacting to significant reaction points of June, May, and middle of July right here, okay, still within the channel. So if it breaks above 148.00 psychological level, as can be seen on the 30 minutes chart right here, then my next most likely target will be 148.50 buying. If it goes above that 149.00, and I keep my buy position just at that. I keep my buy position just at that at 149.00 psychological level right there. Okay. I favor bearish positions, short-term bearish positions, of course. On the USD JPY, we see strong price rejection right here. So generally, I favor bearish positions targeting 146.00. My take on USD JPY right now is trapped within 149.00 and 146.00. Until I see clear breaks of both levels, 149 and 146, I'm not going on major moves. So if I see a clear break of 146.00 I'm going to look for lower positions definitely. But if it goes above 149, then my next most likely target will be 149.5. And above that, the psychological level of 150.00 for the USD JPY. Again, my take on the USD yen, I am strongly bearish. Okay. I favor bearish positions on the USD JPY, but I'm open to short-term bullish positions. All right. The US dollar could do very, very strongly against the yen yet again. So be open to that. I'm locked in between the range of the 4-hour ascending channel, as you can see right there. Locked in 149 and 146. And if it goes above 149, 150, my next target level. So it's quite tough to determine um, a reaction point, or rather a take on USD JPY right now, because of the strong price rejection we see right here. But I can tell you this, the bears are still very largely in the market. The sellers are still very strong in the market. So I'm still open to selling, provided it is within the channel, or at least the confines of the ascending channel. Overall, I still favor bullish positions, even though there's a price rejection, provided it's also within the channel. All right. Now, the weekly says we're in a bullish run. All right. But because of the price rejection right here, price might fall to lower levels. Be very, very careful of that. If it does, I favor short-term bearish. All right. And if it heads back up above my resistance level, then I favor buy positions locked within the range. So for this guy, I'm neutral and trading within the range. All right. Let's do the BTC USD. The BTC USD Bitcoin captured all the take profits given on our fair value gap, as you can see right there, right? We gave the fair value gap description last week, and we had all our take profit levels captured very nicely, right? Now, this week, what's it looking like it's going to do? I don't trust Bitcoin is going to fall further, okay? But to be safe, if it does fall below 110,000, if it falls below 110,000, then my next most likely target, I'll start thinking of lower positions, perhaps to 109K. And below that, perhaps to 108K. I'm not going beyond that for Bitcoin. On lower time frames, however, we see that price is bracing up and it's moving very nicely along an ascending trend line. An ascending trend line right there. So if it breaks below that, and we'll call this a common point here, 114.00, then my next most likely target scalping will be 113, 113.750. If it goes below that, then my next most likely target will be this reaction point here, 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 and here. 113.415, scalping. And if it finally goes below that, then I put it at 113.137, last week's take profit level for Bitcoin. So in the long term, as I said, if it goes below 110,000, then I'll look at, you see that right there, 109. If it goes below that, 108. In the short term, If it goes below the trend line, as you can see the green line right there, and 114,000, then my next most likely target scalping will be 113753, and below that 113415, and below that 113137, if it does. Now, on the flip side, it's also important to note that there seems to be a heads and shoulders pattern right here. Head, left shoulder, right shoulder. So if price breaks above both shoulders, then my next most likely target will be 115045, last week's outlook. Or maybe we should just use a different chart, make it clearer for us. Let's try to find an empty chart. There you go. So if it does break above 114741 at Bitcoin, then my next most likely target will be 115,000. Okay. And if it does go above that, I'll be looking at 116, 115,500. Okay. And perhaps common reaction point here, 115,770. Significant reaction point. You can see the price rejection right there. Coincides with this guy. So this is swing high and this swing low. Other block level, 115,815. I put my next take profit right there. Okay. So again, if price goes above 114,741, I'm targeting 500, 115,000. If it goes above that, 115,505, and above that, 115,815. Now, my take in the long term for Bitcoin on the resistance end of things is if it goes above the 116,500 mark in the longer term, then we could see price head to higher levels, 117K, or perhaps 118K. So I'm going to leave it right there for you. So that's Bitcoin, ladies and gentlemen. It was great to have you again. That's the weekly outlook for this week. I wish you a very profitable trading week. Have a good one. I'll see you again next week. Bye bye.